Welcome back to the Daily Crypto Roundup. It's great to have you with us again today, whether you're listening on the commute, at work, traveling, or just keeping half an eye on the markets while getting on with your day. As always, this is the place where we focus on what's actually happened in crypto today, why it matters, and how it all fits together, without the noise, without the hype, and without turning every move into a prediction. Coming up in today's episode, we're going to cover a range of stories shaping the market right now. We'll look at why crypto prices are moving higher today, and what's really behind the bounce, beyond the usual one-line explanations. We'll talk about fresh warnings from US authorities around crypto scams, continued corporate Bitcoin accumulation, exchange updates that matter for liquidity and access, changes in XRP supply dynamics, a snapshot of overall market sentiment, and ongoing momentum across the Ethereum and Solana ecosystems. Before we get into it, just a quick note on the XRP giveaway this week. As we head into the new year, we're stepping it up a bit. This Friday, we're going to be picking 2 people to receive 10 XRP each, and another 2 people to receive 5 XRP. All you need to do is leave a comment on the episode. Your thoughts on the market, the stories we're covering, or what you're watching as we head into the new year. We'll pick the winners directly from the comments, so make sure you get involved. We also want to say a genuine thank you, because we've seen a real surge in followers and listeners recently. We seem to be one of the only crypto shows that's continued day after day, right through the Christmas period, and it really shows. We're also getting a lot of new listeners tuning in who haven't hit follow yet, so if you're listening regularly and haven't already, please do hit follow so you don't miss the daily updates. And finally, if you're enjoying the show, it would mean a lot if you could rate it 5 stars. We're closing in on 300 5-star ratings, and hitting that over the next 7 days would be a great milestone for us as we head into the new year. Every rating genuinely helps more people find the show, and we really appreciate the support. Right, let's take a look at where the market stands today. Bitcoin is trading just above $88,000. Ethereum is holding around $2,950. Binance Coin is trading near $860. Solana is sitting around $125. XRP is trading close to $1.90. Cardano is holding near 38 cents. Dogecoin is trading around 12.5 cents. Polkadot is hovering at $1.82. Chainlink is trading around $12.47. Tron is holding near 28 cents. That brings us neatly to the big question today, because the market has clearly moved higher, and it's important to explain why, properly. We've seen a noticeable bounce across crypto today, particularly in Bitcoin and Ethereum. And while it's tempting to shrug and say thin liquidity and move on, there's a bit more going on here. That said, yes, you guessed it. Thin liquidity does still matter at this time of year, and we'll explain what that actually means in a second, because it's worth understanding rather than just hearing the phrase over and over. First, though, there are real positioning signals behind today's move. Analysts tracking futures markets have pointed to rising funding rates, which tell us traders are increasingly willing to pay to hold long positions. In simple terms, more traders are betting on upside than downside right now, and that creates support as shorts are forced to cover, and buyers step back in. Importantly, leverage levels are still well below the extremes we see in euphoric markets, which suggests this isn't reckless speculation, it's repositioning. There's also evidence of relief buying after recent pullbacks. Bitcoin held key support levels, Ethereum reclaimed important price zones, and once those levels held, sidelined capital started to move back in. That kind of behavior is typical when markets feel oversold in the short term, but not fundamentally broken. Now, about that thin liquidity point, and this is where context really helps. In peak trading conditions, Bitcoin alone can regularly see daily trading volumes north of $30 billion. During strong bull market phases, volumes can be even higher, with enormous depth on order books at every price level. Right now, we're nowhere near that. As we head into the end of December, a lot of institutional desks are quieter, traders are on holiday, and participation drops. That means order books are shallower, and it takes far less capital to move price. So when people say thin liquidity, what they really mean is this. There aren't as many buyers and sellers stacked up at each price. so even modest buying or selling can create outsized moves. That doesn't mean today's bounce isn't real. It just means moves can look bigger than they would during peak trading periods. And in today's case, the bounce is being helped by liquidity conditions, but it's also backed by real changes in trader positioning and sentiment. Now, before we get to the stories, we are going to take a short break for a word from our sponsors. Stay with us. With that context in mind, let's move into the stories. One of the more important public interest stories today comes from the United States, where the Federal Bureau of Investigation has issued a fresh warning about crypto-related scams, particularly those involving Bitcoin ATMs. Authorities say losses from these scams continue to rise, with criminals targeting victims through impersonation tactics, urgent phone calls, and instructions to send funds quickly via crypto ATMs. The reason this matters is not because scams are new, they're not, but because the methods continue to evolve, and authorities are seeing the same patterns repeated. Victims are often pressured into acting quickly, told they're under investigation, or promised guaranteed returns, and once funds are sent, recovery is extremely difficult. The FBI's renewed warning is a reminder that as crypto adoption grows, so does the responsibility on users to be cautious, particularly when urgency or fear is involved. Next, we've got continued corporate activity on the Bitcoin side. Metaplanet has confirmed additional Bitcoin purchases, adding to its holdings during the latest reporting period. This is another example of a company sticking to a long-term accumulation strategy, rather than reacting to short-term price swings. What's notable here isn't the size of any single purchase, but the consistency. Firms like this aren't trying to time the market perfectly. They're allocating over time, treating Bitcoin as a long-term treasury asset rather than a trade. It's a reminder that while price action grabs headlines, there's a quieter layer of the market focused on positioning rather than prediction. We've also seen updates from the exchange side of the market. Margex has added several new trading pairs, expanding access to a range of assets. While exchange listings don't guarantee price moves, they do matter for liquidity and market structure. More trading pairs mean easier access, tighter spreads, and more efficient markets, particularly for traders operating outside the largest assets. Another story that's been getting attention today involves XRP and supply dynamics. On-chain data shows a growing amount of XRP being moved into longer-term storage, reducing the amount actively circulating on exchanges. Now, it's important to be measured here. Tightening supply doesn't automatically mean price goes up, but it does change the balance between available supply and demand, and that's why traders watch these metrics closely, especially during periods when sentiment is shifting. We also got a broader market snapshot that helps frame all of this. Overall, crypto market capitalization remains just under $3 trillion, with performance mixed across assets. Some coins are outperforming, others are lagging, and there's no sign of broad-based euphoria. That selective behavior tells us capital is still cautious, rotating carefully rather than flooding the market. And one other thing to note today is that there's ongoing momentum across the Ethereum and Solana ecosystems. Ethereum continues to dominate decentralized finance activity, while Solana is seeing growing usage and developer interest. This isn't about one chain winning and another losing. It's about different parts of the market finding their footing as conditions evolve. Another one of the useful signals today comes from how selective the market still is. Even with prices moving higher, we're not seeing a broad rush into everything at once. Instead, capital is flowing into specific assets, specific narratives, and specific parts of the market that traders feel comfortable with right now. That kind of behavior is typical in transitional phases, where confidence is improving, but conviction isn't fully there yet. This is where the broader market snapshot becomes important. Total crypto market capitalization remains just under the $3 trillion mark, which is notable in itself. That level has acted as both support and resistance over the past cycle, and the fact we're holding near it suggests the market is stabilizing rather than breaking down. At the same time, volumes remain well below peak levels, reinforcing the idea that today's move is being driven more by positioning and sentiment shifts than by a surge of fresh capital entering the space. Looking a bit closer at exchange data, we're also seeing a continued pattern of liquidity concentrating in larger, more established assets. Bitcoin and Ethereum continue to dominate trading activity, while select large-cap altcoins see intermittent bursts of interest rather than sustained inflows. That fits with what many analysts describe as a risk-filtered market, where traders are willing to engage, but only where they feel the risk-reward is clearly defined. The XRP story we mentioned earlier fits neatly into this environment. With more XRP being moved into longer-term storage and less sitting on exchanges, the circulating supply available for immediate trading tightens. Again, this doesn't guarantee price appreciation, but it does change the dynamics. In quieter markets, supply-side changes can have an outsized impact, especially if demand begins to pick up even modestly. It's one of those developments that doesn't grab headlines immediately, but can become relevant very quickly if sentiment shifts further. Another theme that continues to underpin the market today is infrastructure quietly expanding in the background. Exchange updates, new trading pairs, and improvements to access don't generate the same excitement as price spikes, but they matter. They reduce friction, improve efficiency, and make it easier for capital to move when confidence returns. These are the kinds of developments that often go unnoticed during hype phases, but prove important during calmer periods. Bringing it back to today's price action, it's important to keep expectations grounded. Today's bounce is real, and it's supported by genuine positioning shifts and improved short-term sentiment. But it's also happening in an environment where liquidity is lower than usual, where volumes are lighter, and where moves can be exaggerated. That doesn't invalidate the move. It just means we need to interpret it correctly. This is why context matters so much at this time of year. In peak conditions, when tens of billions of dollars trade daily, price moves reflect a broad consensus across many participants. Right now, with participation lower, price can move more quickly and more sharply in response to relatively small changes in behavior. Understanding that helps avoid both overconfidence on the upside and unnecessary panic on the downside. As we head toward the new year, that balance between caution and opportunity is likely to define the market. Traders are repositioning, longer-term holders are watching closely, and institutions are largely waiting for clearer signals before committing more capital. It's not an environment of euphoria, but it's also not one of fear, and that in itself is a meaningful shift from where we were earlier. And finally, if you're new here, welcome. And to all our loyal listeners, hang in there. Things are about to get wild. We really do appreciate everyone who's joined us over the past couple of weeks. Keeping this show going day after day through the Christmas period has brought in a lot of new listeners, and we're glad to have you here. If you haven't already, please hit follow so you don't miss the daily updates. That's it for today's Daily Crypto Roundup. As always, thanks for listening, and we'll be back tomorrow with another full update on what's happening across the crypto markets. Remember to drop us a comment below, rate the show 5 stars, and as always, we will see you at the top.